Greetings, everybody. Good evening, good morning, good day. Welcome to the Thursday evening financial thing live stream. How's everybody doing? Hope you're well. Of course, we have a special Thursday evening stream tonight. We're going to have Unbolted live here talking about p2p lending in their business. And if you have any questions for Unbolted, just stick them in the chat. And we have Chris Brown and founder Ashwin. They're going to be here live in just a couple of minutes. Don't forget to subscribe to the channel if you're not. I know some of you are not actually subscribers to the YouTube channel, so if you can subscribe, thank you. It helps out a lot. Thank you to all the Patreon subscribers. You guys are awesome. And yeah, I thought I would wear the summer shirt today. You know, why not? Something different, right? So anyway, without further ado, I don't think we have any other housekeeping things. There will be future guests coming up in August. I will be announcing who once the confirmations are all in on my end. But if there's anybody you'd like to see on the stream, I know a lot of people have asked for Assets Capital. It's probably not going to happen at the moment, but let me know who you want to see on the stream. I'll try to get them here for you. But quick hello to everybody. Debbie is here for the first time in a while from the Cayman Islands. Very nice. Dave Dawson is here. Philip Walters, Paul Bagworth from Kenilworth, Peter Vince from a rather damp Leatherhead. I heard the weather in the UK has been not so kind at the moment. Stephen Hale and sunny Nottingham. So, Peter, maybe you better go to Nottingham where it's warm or sunny. Alan Stratford is here. And Dave says for Unbolted, what's going on with the legal case against yourselves? I don't know. We'll ask them about that and see if they want to comment. John Day is here in Nottingham. So without further ado, by the way, if you could hit that thumbs up, it just really does help, believe it or not. Thank you so much for being here. Let me go ahead and bring them on. Just bear with me for 1 second. Through the marvels of modern technology.
Yes.
Okay, let's welcome to the stream. There he is, Ashwin, Chris Brown. Thank you for being here to both of you. It's exciting. It's exciting. We're trying to get you on for a while, Ashwin. Thank you for doing that. How are you guys both doing this evening?
Pretty good. Another, normal English summer. Not too warm, rainy as always.
No, I understand. I know the weather has not been too kind in the UK. I've been hearing since I left, actually, 3 or 4 weeks ago, everything has just gone down the toilet. But, that's the British weather. How are you doing today, Chris?
So I'm very good. I'm just fiddling with something sound-wise, but I think I'm sorted.
Okay. Sometimes you just have to have a good fiddle. I mean,
yeah.
Just the way it is. Anyway, so we have people watching live. Yes, I know you guys couldn't hear me before I had my microphone muted for a reason. But we're going to go through some discussion here about peer-to-peer lending, about Unbolted, what's going on the business end of that, and what it is that you do. Can you briefly, just before we start, Chris, and then Ashwin, just give me a brief background of what you both did before you came to, well, I know Ashwin was one of the founders of Unbolted. You came on board with Unbolted. Can you just give me a quick background on what you used to do before Unbolted. Go ahead, Chris.
Twin track, which sort of ended up in the right place. I used to have a perfectly sensible career in asset finance, working for a spin-off of Citibank in the UK to doing asset finance rollouts in the IT space for companies. But more importantly, since 18, I've been collecting watches. I bought my first Rolex at 18, and I'm an absolute watch nut and an asset nut. Fast forward to the financial crisis, 2008. Our parent went into Chapter 11. I got a little bit of redundancy money, nothing crazy. And so I chose to go off with my bit of redundancy money, my bunch of contacts, my 20-odd watches in my collection, to go and be a professional watch dealer, which I did. I started dealing with Unbolted about 5 years ago, helping them with watch valuation, authentication, disposal of assets coming off of loans. I then became a customer of Unbolted. I was a borrower with Unbolted for my business. And then as of September 2020, we got to a place where I joined them as an employee. I swore I would never be an employee of anybody again, but the fit was so good. I'm here, and that's nearly 3 years ago, and very much enjoying it.
Okay, how about you, Ashwin? What did you do before Unbolted?
I was mostly in investment banking on the sort of fixed income market side of things for most of my career. I then quit a couple of years after the financial crisis because I was bored, to be honest. Mm-hmm. And then, did a few, things, consulting, writing, etc. for a couple of years. And then had the idea of starting what became Unbolted. Talked it over with Rito, who's the other co-founder, and we decided to start in 2014-15. We had an idea. We got a good reception from the first set of investors we spoke to. We got a good reception from some auction houses that we spoke to. So it's something there where it resonated with the partners who matter, and that's how we got started essentially.
Okay, and then so why peer-to-peer lending? I understand the whole pawnbroking side of things. So why did you decide to get into the peer-to-peer lending market, Ashwin?
I think at that point it was obviously the market then was much more of an emerging market than it is now, and there was a lot of interest in it, and part of it was simple disintermediation, right? So we felt like these were loans. Or the lending side of our business is something that is fairly safe. The fact that we have liquid assets as collateral, and to give you some context, when we started in 2014, gold was a much bigger part of this market than it is right now, for example. And gold is an obvious example where, from my previous background, I knew that, well, you can sell it immediately, you can hedge the price. What's the risk here? And of course, there's always risk, as you realize. But still, the risk is pretty low, and it's more about operational risk and managing the operational risk well. So, we thought that's a good investment for investors. We thought we could reduce the interest rates for the borrowers compared to what people were doing right now. And then part of it was also the fact that peer-to-peer lending by legal construction is a technology business, so it has to be an electronic platform, and the fact that it's an electronic platform obviously also reduces the cost of running the business, right? So it's something where that you can also pass on that benefit to both the lenders and the borrowers. And later on there are other reasons for it in peer-to-peer. Obviously, the fact that you can invest using an ISA is a big benefit in this country. And now I think most of our individual investors invest using an ISA account. So that's something that's fairly attractive as well.
Okay, and so let me ask you this, Chris, did you ever personally invest in any type of peer-to-peer lending before you came on board with Unbolted?
No, I was quite skeptical. I became involved in this at a time when anything you heard about peer-to-peer was, bad stories and quite skeptical. So I hadn't invested, and no, I liked investing in physical assets that I could hold, and peer-to-peer and investments in stocks and shares was. I'm terribly old-fashioned. I liked holding things, so absolutely not. No.
So you were more into buying the Rolexes and kind of been able to hang on to those things, obviously. And what about you, Ashwin? Had you ever had any experience in the peer-to-peer side of personally trying out any other platforms before you went into the business?
Yes, I mean, definitely. To be honest, again, given my banking background, plenty of my friends were very early investors in this space, right? So it's something that I knew about before we started this. And of course, many of the platforms that me and many of my friends invested in now no longer have any retail participation at all. So the space has shrunk a lot in that a lot of the larger players have just moved out, right? Zopa being one example. For example, LendInvest in its early days used to be close to a sort of a peer-to-peer platform, right? A long time ago. So, but yes, absolutely. I think at that time we definitely invested in some of them. I think in the early years, because it was just a few years after the financial crisis, there was still a significant sort of crunch in terms of availability of credit for in all sectors, right? So the returns were fairly attractive, right? And I think obviously as the years went by and the market kind of picked up, then returns became less attractive, and that's when I guess it became less attractive to invest in, let's say, consumer loans, for example, right? Just to give you one example.
Mm-hmm. And when did Unbolted actually put its first loan on the actual digital platform for peer-to-peer? Because I know were you operating without peer-to-peer Unbolted prior to that? Or did you start out straight as peer-to-peer?
So we have only operated as a peer-to-peer lending platform. I think we wrote our first loans at the end of 2014, but I forget exactly for how long it operated just as a sort of friends and family and sort of call it private beta, right? Where the investors were just people we knew, right? 50 people we knew maybe, so that could iron out all the kinks, and then only then did we launch to the public, which was probably sometime in 2015.
Okay. And some people who are in the chat are they're typing in questions, so I thought maybe at the end we could do sort of a short Q&A type thing, if you're okay with that. And two, if there's anything that you're not able to answer, you feel free to say, I can't really discuss, because there are a couple of things in there that I think might be a little on the gray side, but I'll go ahead and ask them anyway. So everybody out there watching, just hang out till the end and we'll get to the questions. So you guys are really sort of unique now in the peer-to-peer space. There isn't anybody out there, as far as I'm aware, that's offering the kind of asset-backed lending that Unbolted does. We used to have some other ones in the space that unfortunately have hit the harder times and now are no longer in administration. But just for anybody that's unfamiliar with what you do, maybe you could just, sort of explain what you do at Unbolted that's different from your peer-to-peer lending competition that exists in the space now.
I have to confess, I'm not completely aware of all the players in the peer-to-peer lending space, so I'm not entirely sure if you're completely unique, but we are relatively unique now in the sense that there aren't any other players, or maybe not more than one player, who does loans against non-property collateral. I guess that's the best way we can define it. We essentially do secured loans where the loans are secured against collateral other than property, and the most of it, of course, is things like watches, gold, art, cars, wine, etc., etc. And these are all essentially liquid assets where you can ascertain a market value. You can easily dispose of the asset if needed, and that's really what we do that's different. And obviously we offer essentially short-term working capital financing. Many of our customers are customers who are essentially borrowing for a need that is somewhat of a business need, I guess, right?
So
I mean, Chris can add more.
yeah, I was going to ask because, and I didn't officially introduce Chris for his actual title, so maybe you can sort of weigh in on that. So for anybody watching who doesn't know exactly what Chris does, maybe this is part of your.
Titles are a dime a dozen. I guess we call him head of lending, but I mean, he essentially runs the business on a day-to-day basis and, makes most of the, consequential decisions on what we should lend, who we should lend to, how much we should lend, et cetera, right?
Exactly. So I took my first, as a customer, I took my first loan with Unbolted in 2017, 2018. And I had friends who had, other dealer friends who had borrowed on peer-to-peer networks against assets, against art. And I was so skeptical of it because the due diligence my friends had seemed to go through, they would just rock up with some asset that they claimed to be theirs. There didn't seem to be much discussion over valuation, and they walked away with money. And I was quite kind of skeptical about it. And I started engaging with these guys, and Rito in particular, who just crawled all over me like a rash. I mean, I started to become one of the larger borrowing customers with a higher profile on the platform, and crawling into my bank statements, who I bought my assets from, where I bought my assets, how much I paid. And the due diligence really, really blew me away. And it was that got me turned on to that P2P could be a good thing. It doesn't have to be this Wild West thing that I've heard about. That was what turned me onto it.
Okay, so you were just really impressed then. Because I think that's a really important point. Sometimes we don't really understand as retail investors what goes into actually researching the borrower itself and what due diligence goes into that. Because I think a lot of us have been burned by the lack of due diligence by some of the other companies that have been in the news and had troubles. So we don't really understand. So it's interesting to listen to that from you, Chris, being a borrower who experienced the other side. Because I think you might be the first borrower that has ever come on this channel in 6 years.
Yeah.
So it's really interesting.
My journey is, have you heard of P2P? Yes, I have. I've heard it's something you don't touch. To, actually, I'd be interested in engaging in it. To, actually, I'd invest in this myself. And actually, I tell relatives and friends about it. And genuinely, I can't speak for other platforms, but the forensic detail these guys put me through as a borrower was quite impressive. We don't put all of our borrowers through it, but in fairness, I at the time was getting into sort of borrowing 200 or 300k from the company, against 600k worth of collateral. So it was all very well backed, but it was very, very well managed.
Okay. So a question to you probably both know this, but what's the current size of the loan book at the moment that Unbolted has?
Shall I take it?
Yep, go for it.
Ashwin will tell you to 3 decimal points, but it's around, we're just nudging on to 7 million. Okay. And £7 million, given all of your property-based people you deal with, would seem tiny. But against, our loan term is 6 months. So the churn, and it's a flow business. It's not have a big book at any one time business. The more salient number is £48 million worth of loans since inception. Mm-hmm. And given that we didn't really do many loans in the first kind of 2 or 3 years, it's just it's a big sausage machine, conveyor belt.
Mm-hmm. And what is the average loan size?
Current book 11,000.
Wow, so that's
growing all the time.
That's a pretty big loan book for an average of 11,000. I mean, you must be running a lot of loans. What is the average return that investors have seen through the years on Unbolted? Do you know what that average number is?
So we've recently upped the rate to a target rate of 10.2% per annum. So we've got to feed through the older loans at the old rate before that is represented fully throughout the book. But I looked at the book earlier, and the lender rate on the book as it stands is 8.4%.
Okay.
But if you ask me again in 6 months' time, we'll be up to the 10.2.
Gotcha. And how do you actually find your borrowers? Is it more of a word of mouth thing, or do you advertise to find these people?
We spend an incredible, and this has been very interesting working with these guys and learning all this stuff. We spend an incredible amount on Google AdWords. We've done some traditional advertising, but the tech these guys have got dialed down into what to bid on what AdWords and which audience is very, very impressive. But certainly in the sort of higher up, so I think the person who borrows a modest sum against a personal asset probably doesn't go and tell their friends about it. But the business guy or the property developer who's had, a more meaningful 50K loan or higher than that will tend to talk to people about it. I've talked to lots of people about it. Being a dealer, you used to go and see a nice friendly bank manager, maybe take a charge against your personal property, be given a nice big fat overdraft with which you bought stock, and that's how you traded. But that's disappeared. So, inventory-based financing for art dealers, watch dealers, wine dealers, antique dealers, it's a very thin market, and we all know each other, and there's a lot of word of mouth goes on.
Okay. And so, Ashwin, question for you. Some peer-to-peer lending companies out there have some skin in the game when it comes to their own loans, so they like to invest. Do you or any of the people who work for Unbolted or the founders invest in your own loans at all? Or are they just too small?
I mean, let's say related parties definitely invest small amounts, as individuals, definitely. But as a fundamental principle, we don't really co-invest, or skin in the game is not a principle for the business. At best we take overflow of loans sometimes, when you need to manage the demand supply side of things, or bridge it till lenders buy it, which is but we don't consciously take like 20% chunk of every loan or 10% chunk of every loan. We don't really think that's we don't really think it adds a lot. It also adds a lot of regulatory complexity if you want to do that, especially on the regulated consumer loan side of things. That's actually borderline impossible to do it on that side of things. So on business loans you could do it, but as I said, there's a lot of things that you would need to do properly to achieve that, and we don't think it adds a huge amount to it. We make obviously significant chunks of running interest on as a platform on these loans as well, and all of those are essentially junior to the lender's return, right? So we only get paid on those loans, or we only make money on those loans once the lenders have been paid. So we think that's plenty of incentive, and the rest is obviously driven by our track record as well, right?
Okay, cool. I wanted to ask you, and this is a question that somebody asked in the chat, and it kind of follows along with what I was going to ask you about the default process recovery. That I think yours is very unique because you get a lot of loans that I see on the emails are saying this has been recovered, this has been recovered. But Alan asks in the chat, could you explain what happens on the platform when recovery from an asset doesn't recover enough to fully repay lenders? I've had a couple of these loans, but I'm not sure how that's handled.
Right. So I think, so there is a waterfall of the payment process, let's say, right? Where the money goes first to repay lender principal, then it goes to repay lender interest, and then it goes to repay our fees, right? And I guess you're talking about, there have been, and there will continue to be many cases where lenders do not get their full interest back. That's certainly not something that we even, we hope that that's the case on, and of course on most loans you do get everything back, even on default. And I think that's the essential principle of our business, something that's different from us compared to many other kinds of platforms where, default and recovery is not an outcome that's it's just day-to-day part of our business, and just, another thing to put in context as well is that in many cases, these are things we do. Calling it default is not entirely accurate in the sense that in many cases it's things we do in sort of full partnership with the borrower. The borrower, took a loan at some point of time, realizes, whatever I needed this loan for is not working out. Let's try and sell this asset, right? So it's something that they don't treat as a sort of unwanted thing where they're acting antagonistically towards us, right? So, but certainly, I mean, we will never say that principal is not at risk. So far we have not had instances where principal has been lost, and in the past we have had a fund which would make up for it. Now we don't have a formal fund that makes up for it, but we have certainly made up principal from our fees as well, in the past, right? Just to give you again, in many cases there are cases where a loan has been renewed many times. We have made fees plenty of times over on that, and if there is a loss in the principal, then we will make it up from that.
Can I do role? Sorry, I'm talking over you, Ashwin. I was going to do role reversal. Can I do some numbers?
You can.
Sure.
Investors on our platform don't have to guess about this. We publish it. There's an investor page. We show our recovery rates. It's all ultra transparent. But the headline numbers are, and I just ran this afternoon in prep, 6,500 loans. These are round numbers. 6,500 loans. 540 defaulted. 57 resulted in a capital loss, a potential capital loss out of 6,500. And that whopping capital loss is 36K, £36,000, which we've made up out of our fees such that lenders have not experienced a loss on that. There's £48 million worth of loans and 36K shortfall that we've made up, and 22K gross interest shortfall.
It's pretty
So
impressive.
with respect, it's tiny.
Yeah.
Respect.
Yeah.
Nothing in life is risk-free, but this is, people don't have to wonder about this. It's updated. It's the question I'm asked most often, but it's there.
Yeah.
Look at it.
Yeah. If anybody wants to look, you can go to Unbolted's website. It's under the Invest tab here. There is a see loan performance button too on that page, on the Invest page. So if you want to go look at those statistics, they're written on the website too. So go ahead, Ashwin.
Yeah, I just want to add, a quick thing. I mean, it's the reason we recover, because we recover so efficiently. That's the reason why we can provide a lot of loan forbearance to our customers, whether they're consumers or their businesses, right? We don't rush them to sell it. We give them plenty of time. And a lot of these, so the borrower has a good experience with us, partly because of the confidence we have in our processes to recover lender funds as well, right?
Mm-hmm.
And I think it works for both sides. And I think, the lenders who've been on our platform for a long time, they understand this. They know that, even though we will not rush to sell, and in many cases we cannot rush to sell, that would be a violation of our regulatory responsibilities as well as our responsibilities to treat our customers fairly. But even though we don't, that in no way harms their interests, right?
Yeah, absolutely. So as Chris mentioned, there is always risk involved with an investment that you're getting. Hopefully an average of a double-digit interest return. There has to be some risk. It's just part of the deal.
Yep.
What are the investment risks that are prevalent aside of, what we've talked about? Is it seems relatively small: capital loss risk, interest loss risk. Is there anything else that you would tell people about that they should be aware of, that if they do invest money through Unbolted, are there any other risks that people would need to know about?
I mean, I think the primary risk, or for us, again, a lot of the risks are related to these assets that secure our loans. Obviously, it's possible that you could have a complete collapse in the price of many of these assets, right? The fact that we only lend for 6 months obviously mitigates this quite significantly, but we have certainly lived through a few instances, and Chris can talk a bit more about that, where we've had significant falls in the price of gold, price of watches, price of silver, just to give you a few examples, right? And that's something that we have to manage quite carefully. We've done it quite well so far, but that's obviously a risk that you take, and that's the risk for which, as you said, you're getting paid a superior return.
Mm-hmm. Yeah, have any thoughts about that, Chris, since you've been on the other side?
Yes. So, I mean, pawnbroking is a very old industry, and watches, since they were invented, going back to pocket watches, were always a large part of a pawnbroker's inventory. Our book is half watches, but that's not uncommon for a pawnbroker. I don't know how familiar people are, but there's been, I've been collecting watches 30 plus years, and watches have ticked up kind of 5-6% per annum, 10% per annum over that time, very, very steady, whatever. We had this odd thing during COVID where all of this QE money, all of these low interest rates, all of these crypto profits came down like through fissures in the rock, down at the bottom into asset price, big rises, and rises that I'd never seen before in my collecting time. So sort of 2020, 2021, up towards 2022, in certain types of watches, we were talking about prices of 50% up, which was absolutely unprecedented. I'm not saying it's kind of tulip levels, but the graph was incredible. So we've got a challenge then, because other pawnbrokers are happy to lend at those levels. That's the value of those watches. You can't not lend, you can't not participate in that market. We've got lenders on our platform at that time experiencing cash drag, pushing us to lend. We want our funds deployed, but we can see this big graph coming up, and what do you do about it? So we looked at that. We started lowering our LTV as this graph was going up. We were typically at 75% LTV. Other pawnbrokers were 85%. We started choking that back down to sort of 65%. There was business we could have written, but we didn't. We were very, very wary of what this bubble was coming, particularly, as I say, where half of our book was watches at that point. And we were very pleased that we did, because if it had gone up 50% in 18 months, there's graphs I can show you. We can share in the show notes afterwards. There are indexes that track the top 50 selling watches that are up 50%, down 50%. So we saw that coming. We adjusted LTVs to do with it. We had a process within the database where we had about 250 watches on the loan book at that time. We drew up a hit list of 50 watches that we were concerned about. We turned off the automatic invitations to renew those loans to those borrowers so that they could step in and assess the value and mark to market. We had a program of engagement with the borrowers on, look, you owe us X amount interest for the period, but if you want to renew this loan, we need you to make an additional capital payment as well to bring the loan to value back to correct market levels. Some people were receptive to that, some people weren't. Some people said, if the loan's underwater, I just want to walk away and leave you with the problem. That was fine. We had to manage that. That boiled down to, we ended up out of that process. So prices, let's just say the prices are up 50%, down 50%, but have been stable now for the last sort of six months. But out of my hit list of 50 watches I was worried about, we ended up with 11 where we did in fact had to sell at a loss to the loan principal amount. Those 11 watches was a total of £9,000. We made up that loan principal to our lenders. That's included in the overall number I gave earlier. And and we rode that storm through. But that, to have a change in quite an asset, quite a stable asset class within that very short time frame is pretty much unprecedented. But we rode it. We rode through it.
I should also just mention, by the way, I mean, because many of the lenders who invest us will also know, I mean, one of the other risks, of course, of investing through the platform, and this is something that we test on for new lenders, is things like legal risk, for example, right? Borrowers can sue you, borrowers can, so these are extreme tail risks, but, as you may or may not know, we do have one instance of this sort that has dragged on for quite a long time.
Yeah, are you able to share? I know somebody did mention about that. What is going on with that situation? It's been going on for what, 3 years now?
It has been going on for a while, partly, of course, because of COVID, partly because of how the system works. But I'm afraid I can't talk about that at all for understandable reasons. I hope you understand.
Okay, but it's being addressed, and hopefully it'll come to some resolution at some point. You hope.
We certainly hope so.
I have to talk to my friend, the judge in London, who's help you out there. Just kidding.
Lawrence?
Yes?
Can I ask you an ignorant question?
You may.
In your experience of other P2P networks, is it unique for us to have one legal case in all of our time?
Yes. They say if you haven't been sued, you're not doing something right in the peer-to-peer business. So
6,500 loans, one legal case. I understand it's what people focus on, but I don't know out of ignorance, but I would assume most other P2P would have somebody a legal case or two.
Yeah, they come up.
The other part about this particular case in as well as the generic principle is that in our view, the best way that we manage it and the best way for investors also to manage it is that because we have so many loans, we allow investors to just spread their investment out, right? Most investors don't have huge amounts invested in any one of these situations, right? So even if there is a loss, a delay, diversification is the best solution.
Yeah, and I think
I should.
I'm sorry. I was just going to say, whenever money's involved, lawsuits happen. It's just the way it is. But go on, Chris. What do you got to say?
I have to remind myself, and I understand that if I'm the lender, where maybe I'm wanting to wind down my account and I'm wanting to do other things with my money, the fact that I've got £4.62 or 50 quid or whatever the amount is sat in this loan that's held up in this legal process is jolly frustrating. So I can sit here and talk about all of these loans and the very small number of capital losses or interest losses or this legal case. So I don't want to sound flippant about that. I get it's jolly annoying, but
but it happens. I mean, we've all been through it. Where I would love it if I just had £4 stuck in a loan. Some of these other platforms, it's hundreds and thousands. So believe me, it happens, and it's just part of the risk that. I think people have to understand that you do not get anything for free when it comes to investing. Same in the stocks and shares market. You put money into a stock, that stock can go down 50% in a matter of a few days or to zero. So it's just part of the deal. Let's talk about what's the biggest single challenge right now that you are facing as a business?
I think, if I can answer, I mean, in my view, the biggest challenge that we've always faced is, we run what you would call a double-sided marketplace, right? So there's a constant need to balance the flow from lenders and the flow from borrowers. And there is always a mismatch, for when COVID happened, our biggest problem wasn't so much defaults as the fact that we had a huge number of repayments in the first year in 2020 because there's no small business activity. People got a lot of free money from the government. So, we had a shrinkage in the loan book because of that, a lot of excess funds from lenders that continued for a couple of years. Now we have a position where that's kind of reversed, and we have a lot more demand from borrowers. So I think that's always that's probably like the biggest ongoing and continuous challenge, right? It's sort of inherent to the business, and it's something that needs to be managed and forecast.
Any thoughts on that, Chris? What's your take on what do you find to be the biggest challenge for you with the business?
So going back to my previous career in asset finance and everything being extremely target driven, and you must do this, and what growth have you had in your numbers? There was a massive. One of the reasons I was comfortable working with Unbolted is, there was that time during COVID when the loan book was down, our poor investors were getting cash dragged. They were, write more loans, write more loans, write more loans, write more loans. But at no point was I put under any pressure for targets or this, or do this loan and get this bonus. And I think, so why are we the only people in this space still doing this asset lending on a P2P basis? I think we just haven't ever given into those pressures, and we could have probably had a bigger book, and we've probably not done loans we should have done. But it's a very old-fashioned long-term view. But this shift in the watch market I talked about was huge and unprecedented. And people go and look at the graphs on this, the 30-year graph of watch prices and what happened. It was for that to be half your book and to sail through it with a 9K principal loss has been, which we've made up, was a significant challenge.
Yeah, it's weird too what happened with the watch market, because I think you can't even walk into a Rolex dealership now and even buy a Rolex. I know it was much worse 6 months ago during COVID, whether it was the manufacturing slowdowns, but I could definitely see why those watch prices really took a hike. But gold has been pretty stable, and I know it's a little bit higher now because of our crazy governments and what's going on. So, which is good for you guys, because that stability in the gold price means that if one of your loans goes, needs to be sold at auction, you can sell it and hopefully have not too much of a mismatch on the valuation, especially with the LTVs, right?
Yep.
Yeah, I mean, gold is just one thing. I mean, is that gold has become a smaller percentage of the market globally as well, to some extent. Even in the US, just because of people don't own as much gold as they did pre-2008. A lot of it got when the prices went up, and so on and so forth.
Yeah, that's because they're buying Bitcoin now, Ashwin. That's the new digital gold. So let me ask you this. This is a question too that was asked. As far as your business profitability, is Unbolted a profitable business now?
Yes, we are a profitable business. We have been for a while, and now we are a profitable business in every sense of the word. Maybe there was a period of 1 or 2 years when we were profitable operationally, but we were plowing money back into investments of various kinds because of that, because we wanted to invest in certain things. But now we're a profitable business, even taking that into account.
Okay, how big is your staff count over there? I remember you're pretty small. Last time I talked to you, you didn't have a huge need for a big staff. Is it the same now?
No, I think part of the reason, just as I said, is that the reason we're profitable, the reason we is partly because of the fact that we have invested heavily in systems, and we have a small, high quality team that can leverage those systems to do the business, and that and when our loan book grows, we don't need to hire people in proportion to that growth in loan book, which is important to be a profitable business. So, Chris can, I guess, talk about the size of the team right now.
Tiny, a crack elite team. We glorious few. So our book's 7 million. I used to have dealings with a pawnbroker online, very successful, a precursor. They used to, any UK people, they were called Borrow. And they had their comparable loan book in luxury assets, I think was about 20, 30 million quid. So we've got 5 staff. I think they had 100. I think they had 3 people that did asset disposals at any time. They had a team of 6 people chasing defaults. They had this and that. But without being creepy, the tech that Ashwin and Rita have written, and the automation is just ridiculous, and it's there at our fingertips. And that's what it has to. It's a flow business. It just has to. Anything. It's like a stream. Anything you do to put your hand in it to stop the flow is not good. So it just flows, and you're nudging things here and there when you see a problem coming down or something you need to adjust for a bigger loan. But the tech and the flow just works extremely nicely. And our staff are very good there. You know, I've got this watching background. We've got art experts, people from auction houses, people who ran jewelry businesses. We've got mature entrepreneurial people who know assets, know people, got good people skills, know what they're doing. Mm-hmm. And yeah, that's us.
Right now, like I said, we're talking with Chris and Ashwin from Unbolted, a UK peer-to-peer company. If you're enjoying the content, please hit that thumbs up button. Don't forget to subscribe. We'll continue on here probably for another 15 minutes or so, because I know you guys have to go for dinner. It's getting late there. You must be hungry. Let me ask you this. This is a big question that comes up all the time. You're a smaller company. You're a private company. And it's quite an ask to get consumers to pony up their cash, invest it through a company, and have trust. And we've been burned. You know, a lot of people have been burned. And I always ask businesses this. What advice do you have for investors to know that they can have some trust in a business when they're investing through peer-to-peer? And how do they find reputable companies like yourselves to invest their money through? What kind of things can they do to screen those companies and make sure things are on the up and up?
I think that's the $1 million question, unfortunately. I think the only thing I can say is that, you know, and this is true for financial services, regulated financial services as a whole, in any country, is that, you know, ultimately it's the reputation of the people that is the only real protection that you have. You know, I mean, you know, speaking personally, for example, you know, in regulated finance, and this is something that, you know, has been Rito and my, you know, it's been almost our entire career. You know, we are criminally liable if something goes wrong. You know, even something like willful negligence is something for which we carry criminal liability, right? And under the regulations. So, you know, most of our career and most of my career, I've had the good fortune of working with people who go nowhere near any gray lines even, right? In this business, right? Things are done whiter than white. So I think that's the only protection at the end of the day, right? Because you're dealing with money. If the people who are running the business are not reputable, then, you know, regulatory protections are not going to, they can never, you know, really be enough, right? Mm-hmm. That's just my opinion. Now, how do you measure, you know, the reputation of the people running the platforms? That's a whole other question, right? I mean, I honestly don't know the answer to that question.
You use AI. You just type their names in Chat GPT and see.
You have your research and be very careful about any gray flags, right? Or any kind of red flags that turn up. You know, I think, to be honest, I mean, there's obviously been failures of platforms, but I think obviously another big problem in the sector has been that many reputable platforms have actually just exited, right? They have exited. They've sort of stopped taking retail funding, moved to institutional funding, or, you know, become a bank, or, you know, change their model entirely. So I think that's also led to a, you know, reduction in the number of options that investors have.
So what about for the future, as the future of Unbolted? Chris, do you have any plans to change the way that things are? Is it sort of stick to what you know works? I presume you're going to continue to support retail peer-to-peer lending. What is the future for Unbolted look like?
I've got a very easy answer on the risk thing.
Go ahead.
Interrogate a secured loan is only as good as the security. Interrogate the hell out of the security. I have lenders email me. You've just given a loan against a Banksy girl with balloon, limited edition 600. You valued it at £50,000. Why did you say that amount? and expect me to be able to say, well, here's this auction comparable and here's that. You've just given somebody a loan against a Rolex Daytona 2020 bimetal and he valued it at £16,000. I've just seen one on a platform for £14,000. Why is that? Ask us, interrogate. We tell, on all of our loans, we tell you exactly what the assets are. Any lender should be able to give you that information. I suppose it's odd with property, but you got Zoopla and stuff. So all these property people who tell you that they've just done a loan against a 3-bedroom semi in Leicester or something, look it up.
Mm-hmm.
It's as good as the asset. Easy.
Okay. Yeah.
Forgive me for being flippant. What's the future?
Yes.
Higher value loans, more business customers. The flow works very, very well. But you come back to us in a year. If we're 11k average loan size now, it'll be 20, 25k then. We used to do a 100k loan and think it was quite an event. We routinely do loans of 200, 300k now, very carefully done, and more of that, and to grow the book and grow the returns. Make sure people get their return, but make sure it's done safely.
Okay. Good answers. I'm just going to quickly look through the chat here and see if there's any questions that I'll throw at you might want to answer.
Sure.
What's your, this is from Dave. Just going to pop it up on the screen. Dave Dawson said, are there plenty of new loans coming in? Do you have a pretty good loan flow at the moment?
We do, for the first time. I mean, Ashwin was talking about the balance between lenders and borrowers. For the first time, you could invest in Unbolted today, and we have loans that are currently that you can buy into. And that's been the first way it's been like that since I've been involved in the business. And we have a terrific platform. I just before this call, we did a renewal on a 60k Banksy artwork loan. Yesterday, we did 110k on an ancient manuscript. I've got another loan that's renewing next week for 150k in ancient manuscripts. The pipeline's really, really strong and good.
Okay. Somebody, Roger, has asked, how does Unbolted sit with the Open Finance Limited? What does Open Finance do?
I think he probably means Open Access Finance. That's just the name of the company, really. When we started,
okay.
or when a decade ago I had to register a company, I that was the first name that came in my head, and that's all that is really.
Okay.
There's no other meaning.
All right. Generic Penguin asks, does Unbolted ever plan to offer a secondary market, allowing for lenders to exit loans early?
So we. The short answer is no. I mean, so we do sometimes, and we have allowed certain kinds of loans to be sold on. The challenge here is ensuring that the buying and selling is fair for both the buyer and the seller. Often the buyers, may act without looking at it too closely and buy a loan maybe at something that they did not want to, or maybe at a wrong price. And this is further complicated by the fact that our loans, compared to many other loans, are effectively bullet loans, right? So interest keeps accruing. So then there's a question of, well, if I want to sell it 1 month from now, what's the price you should get? Should you get some of the accrual? Should you get none of the accrual? Should you get all of the accrual? And we've essentially decided it's not worth that sort of the conflicts that arise between the buyer and seller and the complexity that will come from having to manage that sale. It also complicates, the question of if somebody bought it with some accrued interest, and then will they get their principal back? So there are plenty of, when you have to make the decision upon disposal, right? So I think the short answer is that we're not really looking to have an active secondary market, primarily because the loan term is fairly short, right? And if you have a reasonable portfolio, then your portfolio turns pretty well. If you want your money back, as many lenders do, based on their personal circumstances, they will simply turn off new investments, turn off what we call auto lend, and just the money will kind of flow in regularly over the next 6-9 months, right? So.
Okay. So I think sometimes secondary markets can really complicate platforms too, because some of the
Yes.
ones I've seen have been really convoluted and difficult to understand. So and since your loans are only
I mean,
6 months.
we've had complaints on all sides, and the number of people who find it confusing, it seems to be something that will take up a lot of our energy on tech and on customer service as well, and which doesn't seem proportional to the number of people who use it.
Okay. Somebody was asking me, I don't know if they're asking about how the allocation of auto lend works. So how do you allocate money that's, from auto lend investors into a loan? Is it
Right.
first come, first served, or how does that work?
No, so it's really pretty simple actually. Well, it's not simple, but the logic of it is simple. It's simply, the amount of money you have in your account and the amount of, there's an auto lend instruction on per loan. You say, listen, I would be happy with X amount per loan, right? And this allocation simply is proportional based on all the lenders who have given these allocations, and it will then distribute it in the loans. Now, of course, if the loans are very small, then there is a randomized element as well. So, we don't give anybody less than a £5 chunk. So if there's a £500 loan, then we have more than 100 lenders, right? So that £500 loan is going to get allocated randomly among the lenders that exist. Now, if it's a large enough loan where that randomization is not a problem, then, as I said, it gets allocated proportionally, and the proportion is based on the amount of cash you have in the account and the auto lend instruction that you provided us, right?
Mm-hmm. Easier to explain, more difficult to code.
Yes. Again, there's a lot of edge cases and things, and but we've done plenty of testing on it just to see that it's fair, the experience of it, and over a reasonable time period, you should not see any sort of
Okay. All right. Let's see. Let's ask one other question here. Oh, just a couple of positive feedbacks to. Maybe you get to watch this over and read some of the chat comments, but we've had a few people that are saying that Unbolted, they're very happy with you guys. Been with you for several years. See, Darren in Cambridge, he's been investing with you for 3 years. It's one of his favorite peer-to-peer platforms. So it's always nice to hear, because a lot of times you hear some negative things, and
that's good.
It's nice to hear some positives. Another person saying they've really enjoyed your answers and that they will be investing more of their hard-earned pennies into Unbolted. Let's see if there's anything else here that's of interest. This was a question from Mr. Healing. It says, do IFISA holders drip feed from their general account? So I think he means if he has a general account and then wants to open an IFSA, what's the easiest way maybe to get the money from the general into the IFISA?
I mean, they'll have to take the money out and put it separately into the IFISA account. I mean, some of the restrictions. I mean, people always ask us, can I transfer my investments over? Can I do this? And intermingling is always a challenge, because you run into some HMRC kind of risks and reporting, challenges on our side as well. And for one, you can't transfer investments. Just to give you one example, right? That's an absolute no-no. And so it's best if things are completely separated, clean, and you do the transfer around.
Okay.
We have many clients who will try us with a classic regular account with a nominal sum to see, try us for 6 months, see how we look, and we'll then put in the real money through ISA, and that's quite typical. And then you would just run down the little bit that you had in your classic account.
That makes sense. Okay, perfect. I think before we get out of here, is there anything else that, Chris, you want to say about Unbolted to the wide world of eagle-eyed investors out there?
I think us great British public love anything property related, and we think anything with property equals zero risk, right? And Rolexes and gold and paintings, God, that's risky. So there's risk everywhere. But we have these properties that we have buy-to-let properties in our life. We have our nest. Lots of people are using their home as their nest egg. The great British public is their futures are very, very aligned to the property market. So it's all about diversification. So if you want to diversify some of your money into P2P, and you want to diversify some of your P2P money somewhere, if 98% of the world is offering property-based P2P, are you really getting diversification if you're doing a property P2P? So give us a go. Try us with a little bit of money and give us a go. Diversify.
Sorry. There we go. I coughed okay. Before and unmuted my mic so I didn't blast you in the ear. Ashwin,
I probably set off the hyperbole alarm with my last outburst.
Hyperbole, that's a big word.
Cut the audio.
No, it was definitely me. Anything else, Ashwin, that you want to tell everybody about Unbolted before we leave?
No, not at all. I mean, as Chris said, I mean, we're, and just about where we are going. I mean, we are the future of Unbolted is what it's been for a while, which is prudent and healthy growth, and one of the questions you asked, certainly retail investors are certainly something that is still pretty core to our business, and something we have no intention of changing anything on that front.
Okay.
So we're happy to have any investors who would have us.
I do want to ask you one other question. I know I said the other one was the last question, but this is important. What's your current feelings about the state of the peer-to-peer sector at the moment? I know it sounds like you don't maybe pay too much attention to what other companies are doing and sort of focus on what Unbolted is doing. Do you have any feelings about peer-to-peer in general, and whether you think it's going to be a thriving sector going forward or maybe more of a shrinking one?
Obviously in the recent past, or even in the medium term past, it has been a shrinking market for many reasons. Reputational, some bad actors, the regulatory burden obviously has also increased a significant amount, but most of it, quite a lot of it for good reasons, right? So I think, what's the future? I think it'll still be resilient, and I think we may see an upturn in the medium term, especially now that you have a higher rate environment. And in a higher rate environment, I think peer-to-peer lending, well, for one, as an investor, you need to make your cash work, obviously, because inflation and where the Bank of England rates are, I think even in terms of borrowing, the spreads and at which a peer-to-peer lender can operate is probably more competitive now compared to institutional funding. But I mean, these are. So I think if we have an environment over the next 4 or 5 years where rates remain relatively elevated, I think peer-to-peer lending still has a place to be. Both for the investor side and from the borrower side, and and from a platform side, because it's one of the reasons why a lot of platforms have exited is because they find institutional funding to be a more attractive proposition overall, right?
Mm-hmm.
And I think that sort of comparison also sometimes tilts a little bit in favor of peer-to-peer lending as rates go up. So I think that should also keep the sector resilient. Whether it can grow much or not, I honestly don't know. As I said, as you said, I don't pay. We don't pay a huge amount of attention to a lot of other platforms, but there's certainly still quite a few platforms out there, and and there's a reason for it to exist.
Okay, Chris, I got one more question for you.
Yes.
Are there any plans to change the minimum investment amounts or go to institutional funding, or are things just going to kind of remain as is?
I like things as they are. I'm often competing for new deals against pawnbrokers and asset lenders who are institutionally based. So we're paying 10.2% for our money. A lot of the guys I'm competing against are paying kind of 14, 15, 16% for their money institutionally. And I'm very happy to compete with them with the cost of funds we have and our low overhead. So no, I wouldn't change what we're doing. We have to. We're in the middle of a competitive sandwich. We've got to keep lenders and borrowers happy, and I think it works well.
Perfect. Okay, well, listen, there you have it. Thank you very much, Ashwin, Chris from Unbolted. Hopefully we'll have you back on in the future. Hopefully it won't be another, I think it's been about 4 years or 3 years since I last talked to you, so hopefully it won't be as long next time. But thank you for being here, and best of luck to you with Unbolted going on in the future.
Thank you, Lawrence.
You're very welcome. It's an absolute pleasure. Thanks, guys. Okay, take care. So there you have it. Unbolted, live in the flesh. Where else can you get this information directly from the people that run these companies? Only right here at Financial Thing. So I hope you enjoyed it. I hope you enjoyed the content. If you did, hit that thumbs up before you leave. We'll be back next Thursday, all being well, with the universe. Be back here. Hope you guys have a wonderful weekend. Enjoy your weekend. Enjoy that glorious British weather. And thanks again for being here. We'll see you next time. That's all I got. Take care. Bye.